Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 22nd of August 2021 and we're publishing our gold and silver weekend update for the week ending the 20th of August. Now this video has the same content as the one we produce on a Saturday, and so if you've listened to that one, then please there's no need to listen further. Now before we go ahead, just a quick shout out to our Crypto Plus channel, where later today we shall be reviewing Nikki's portfolio, which has grown even further after last week's rise. So please subscribe to that channel and press the bell sign if cryptocurrency or definance is your thing. And we've placed a link in the description box below. So let's now move on to gold and silver. Gold rose $3 last week, rising from $1,779 to $1,782, having hit a high of $1,795 and a low of $1,771, a rise of just 0.1%. In sterling terms, gold finished the week at £1,307. That's up £24. And in euros, it closed at 1,523 euros. That's up 14 euros. Silver fell 72 cents, from $23.77 to $23.05, having hit a high of $23.90 and a low of $22.90, a fall of 3%, following the previous week's fall of 2.4% and the week before that of 4.5%. In sterling terms, silver closed at £16.91. That's down 23 pence on the week. And in euros, it closed at 19.70 euros. That's down 45 euros. The gold to silver ratio rose significantly from 74.8 to 1 to 77.3 to 1. Bitcoin is up $2,486 and stands currently at $48,857. Taking a look at equities, we can see the Dow Jones closed on Friday at 35,120. That's up 225 points on the day, but down 395 points on the week. The S&P 500 closed at 4,441, up 35 points on the day, and down 27 points on the week. And the Nasdaq Composite closed at 14,714, up 172 points on the day, but down 168 points on the week. So broadly, equities down. Brent crude closed at $65.18, down a humongous, really, $5.41 on the week, and WTI crude closed at $62.14, and that's down $6.30 on the week. We're now seeing oil prices come back down, thank goodness. The plan was to get them up to and hold close to $80. That seems to have been averted to some degree. Our perfect estimate for oil prices are in the mid $50 bracket. Of course, as a consumer, we'd prefer it to be much lower, but we have to also admit companies have to make profits in order to keep in business and keep people employed. Frankly, anything above 60 is, in our view, an extravagance. The dollar index stands at 93.49. That's up 0.98 on the week. Don't be surprised if it strengthens even further, not necessarily this week, but during the course of the next couple of months. We concluded last week's video with the following forecast, quote, "Next week, we are expecting gold to trade between 1725 and 1825, with 1675 and 1875 as outliers, and silver to trade between $23 and $24.50, with $22.50 to $26 as outliers." Gold traded last week within one of the tightest ranges we've seen for a long time, just $24, with a high of $17.95 and a low of $17.71, falling perfectly within the mid of our forecast of $17.25 to $18.25. Silver traded within a margin of $1, which, apart from last week, is what it's done for a little while, between its high and low of $23.90 and $22.90. When we say traded for a while, we mean within $1 of its high and low, not within $23.90 and $22.90. With the exception of a 10-cent dip at one point, again nicely, falling within our range, and well within our outlier range. Now, each morning we've produced daily updates expressing the reasons for the various price movements and what to look forward to. And we'll place links to all of the 5 videos that we produce below, so you can see or listen to an explanation for those movements should you desire. But let's first take a look now at gold. Within its very tight margin, it whipsawed basically all week. One day being below the previous Friday's close, then above, then below, etc. It is consolidating at these levels, and with a much stronger dollar reaching some of its highest levels for 2021, it's holding up extremely well in our view. Although it has held up well, we have to add it also has been unable so far to break back above 1800. It would only take the US dollar to fall back to an index value of 92 or just into the late 91s to see gold break above 1800 again. Unless, of course, other variables come into play. But the dollar's strength, heightened by bond purchase pairing rhetoric, is having for now the strongest impact on gold prices. There is another aspect that we also have to add here, and one which we know the majority of our listeners will not really like, but we have to state the truth, regardless. The cryptocurrency market has reignited again this past month. We've seen their market caps rise above $2 trillion again, and today is standing at $2.1 trillion. And many believe it's in the final stage of its cyclical bull run, with a blow-off top just weeks or a few months ahead, potentially catapulting the index to anywhere between $2.5 trillion and $3 trillion. These are funds, much of which would have traditionally gone into gold and silver. Now, of course, not all of it, but even a 25% portion would have had a dramatic effect on both of their prices, and certainly gold would be trading closer to $2,000 and silver to $30, even in the current environment, if it were not for crypto, and possibly trading even higher than that. The interesting news for all of us to evaluate, and we shall be sending private emails to Inner Sanctum members on this when we believe that time has come, will be when both equity markets and crypto markets begin their much heralded eventual descent or collapse. Then there will be an opportunity for gold and silver to shine again. Meanwhile, we await Jerome Powell's comments at the Jackson Hole's conference on the 27th of August, with the FOMC meeting in late September, providing the clearest guidance as to where the US and therefore the global economy is heading and what's going to happen to QE. Now, most technical analysts have their eyes set on gold reaching $1,835 before expecting some serious upside momentum to $1,900. To the downside, there are fears of gold touching $1,680, should it fall below support at $1,750. And if it falls beneath the $1,680 level, then a rapid decline to $1,500 cannot be ruled out. However, there is a consensus that at $1,680 gold will have hit a triple bottom, and this is where there should be significant support, and we tend to agree with that at this stage in the economic cycle. We would start buying gold again at that level should it be reached. If, of course, it hit $1,500, there would be some very significant purchases on our part. Silver has some support at $22.90, then at $22.60 and $22.35 underneath. We need to see silver push above $23.20 until it meets its next resistance level at $23.50, then $23.80, and then the psychological $24 level. So it does have an uphill struggle ahead. For perhaps the first time in well over a year, we're seeing some analysts mentioning that silver could potentially fall back to $17 should the $20 support level be broken. Now, whilst we could not rule that out, it does suggest at least that some traders are more pessimistic silver than they are gold. Why do we say that? Well, if they're predicting gold's ultimate low at 1500 and silver at 17, we have a gold to silver ratio of 88 to 1, some 10 points higher than it is now. On the positive front, should the dollar fall, there is potential for silver hitting $28 again, but we suspect that is a little way off for now. Now, economic data last week, which we covered in the daily videos, revealed very poor retail sales figures for July at minus 1.1%, compared with plus 0.7% in June. But, in fairness, industrial production was up, and initial jobless claims were better than expected. Now, this coming week, we have the following economic reports coming out of the US. On Monday, the Market Manufacturing Flash PMI for August, and the Market Services Flash PMI, and also existing home sales for July. Tuesday, new home sales for July. Wednesday, durable goods orders for July. And on Thursday, the traditional weekly jobless claims and the GDP revision for quarter 2. And then on Friday, personal income, consumer spending, core PCE price index, and advanced trading goods, all for July. Important day. And the UMH Consumer Sentiment Index for August. So important days to note: Monday, Thursday, and especially Friday. It's nice to round off the week with an important set of economic data. As we stated last week, there is no doubt that gold is essentially caught between two opposing and contradictory forces. The strength of the global economic rebound, in spite of rising COVID Delta infections, though perhaps recent figures may call that into question, and the uncertainty of Fed tapering its bond buying program and the earlier introduction of interest rate rises. Generally speaking, unless something untoward happens, we do not really expect to see any rate rises until at least the end of 2022 and more likely into 2023. But we can foresee tapering, which is more likely to start early 2022, though some economists are predicting the start as early as September, or at least an announcement in September, with a start in October this year. Though we aren't totally convinced at this stage, especially as import prices were lower than expected. We have seen a fall in CPI rates and retail sales were really quite poor, that this tapering will quite occur that soon. But there's more economic data to come out before now and then. So where do we see gold and silver prices moving this next week? Well, again, we're caught between whether we're going to see more hospitalizations due to the Delta variant and further restrictions in trade as a result, and perhaps more pertinent in terms of effect, whether the dollar will hold its current value or will it fall back. Looking at gold's performance to date, and frankly over the past 3 months, 6 months and 12 months, we can see that gold is down just over 7% on that year, but is doing its best to gravitate towards 1800, but keeping a firm bottom just below 1700. But that said, and we should note this, gold stocks have fallen to their lowest levels for the year. So next week we expect to see gold trading between 1725 and 1850, with 1675 in case there is this dip to the low, and 1875 as outliers. Broadly in line with last week, though we're raising the bar slightly on the regular trading range to allow gold to try and reach and exceed that $1,800 level. Silver is more tricky for us this week. If there's more negative trading news, then we can expect it to fall further. And of course, if the dollar strengthens, remains to be said. If gold were to fall below 1750, silver too will fall. Of course, even though if the dollar strengthens, silver will go down, the adverse effect, or vice versa effect, will also apply. So should they fall, we can expect it to rise a little. Now, as we have to commit, we can see a trading range for silver between 22.25 and 23.75, with 21.75 and 24.50 as outliers. That's it for now. What do you think? Please do share your thoughts. We're going to have 2 videos coming out tomorrow, a repeat of this one under a different banner, plus some discussion about what central banks are doing. Meanwhile, thank you so much for listening. If you haven't done so, please give us a thumbs up, subscribe, and press the bell sign. And finally, we wish you a safe, enjoyable weekend, and as always, a prosperous week ahead. Illuminati silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.